The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Good morning. Happy Thursday. Back here at the Small Cap Roundup. I've been filling in for Larry while he's away, and I'll be doing that on Wednesdays for a few more weeks now. So it's kind of interesting. My schedule's a little bit out of whack. I sometimes have to remember which day it is, which show it is, but that's okay. Because basically I'm going to be showing you the same thing, some of the market's best performing small cap and low priced stocks. Now, one important thing to point out today, welcome to your market correction. I love market corrections. I really do. I'm not being facetious at all. I love bull markets too. I love rallies, but corrections serve a terrific purpose, of course, in flushing out the excess in the markets. Very normal. I do see a lot of panic out there already, where people just looking at certain stocks that are falling and frankly freaking out a bit about some of these. This correction is needed. It's a normal part of the cycle. You will see stocks gapping down. Just the pessimism becomes rampant. That is normal. Part of my trading methodology that I talk about a lot on the show is getting out of the way when you see a correction coming. And no, that doesn't mean that it's necessarily time to turn everything into a short bet. That's not always wise either. Especially in an environment where news events and economic data can whipsaw stocks on a day-to-day or even hourly basis. Now, right now, I am still invested in some of my index ETFs, but I'll keep monitoring them. I'm out of the IWM, by the way. I put that one up there. I've talked about that in recent in a few of the shows that I had been holding that one. I'm out of that one. But I am looking at, let me see here. Let me pull up the chart for the RWM. I was looking at this one this morning. Now, this is the Russell 2000 short ETFs. I may take a look a little later on today at some of the ultra shorts. Before I got on the air, the RWM was ticking a little bit lower, so I did not make a purchase. But let's see here. I've got a few things coming up there on my screen that I don't want on Tiger TV. There we go. Okay, get rid of that. So I did not make a purchase in the RWM before I came on the air today. Waiting for it to clear 26.48, so if it's there after the show, I may get into that, really as a shorter-term trade, not looking at that at all as any kind of buy and hold longer term. I'll just let the trend tell me how long I should stay in that. So I've been watching that, not in it yet. That could change, and as well, I'm not even recommending that. I'm just saying I'm taking a look at it. I may also look at some of the ultra shorts. Okay, another consideration that's important with regard to taking positions today is that it's the last day of trading for the week. And as I'm sure many of you have heard, it's been all over the media. We've got the jobs number from the Labor Department coming out tomorrow while the markets are closed, and setting aside the issue of whether the government games those numbers or not. Nonetheless, whatever you think of that, the markets do often move pretty sharply on those numbers. Very capable of moving the market. So that could lead to some interesting trades when we see the major indexes, stocks trading again on Monday after tomorrow's Good Friday holiday. And of course, Europe is back. And as I always say, did anybody really think those concerns had gone away? It's kind of funny. It's everybody seems to feel better for a few days, and stocks rally, and then the worries come back. So we have Bond yields rising in Spain, and Spain has been a concern. This isn't exactly some brand new thing popping its head up that nobody had ever thought about before. Lenders are requiring more of a return to lend money to that country, so that means they're seeing more risk of getting their money back. Not a good indication at all. As always, we've got mixed economic data. We had some good same-store sales numbers. But, nonetheless, the market does appear ripe for a correction, and that is not based on opinion. That is not based on conjecture, not based on just sort of flipping a coin. The length of the prior market run-up is one of the factors you have to consider, and most importantly, the number of days of heavy volume selling in recent weeks. They have been piling up. So just a few things in there to be considering. Before I got on the air today and I was listening to Steve and Tom talking about just some of the positive attitude, and I so agree with that. I subscribe to that theory myself, and I think that really comes much more into play, frankly, when you are entering a market correction, because that's the time when, for a lot of traders who do tend to go long, prefer that long position, that's the time when people tend to get very discouraged, panic about what they're seeing in stocks. Just remember, a market correction is a time of great opportunity. That's really the time when you want to be looking at stocks that are showing orderly price consolidations, getting support above key moving averages, maybe the 50-day, maybe the 200-day. You really want to be looking at that. And of course, as I mentioned, if you heard me on Larry's show yesterday, I did talk about the fact that I use fundamentals as part of my screening process, not ever part of the buying or selling process, though. So in other words, fundamentals never play a role in when I decide to enter or exit a trade. So that's just something to look at. But, one of the things, just to come back to the idea of not becoming too discouraged in a market downturn, is because that's the time when these good stocks do set up in constructive areas of price consolidation and allow you to identify a new entry point as they emerge from that consolidation. So it happens over and over and over again. Everybody's joking a little bit about Apple today in the Tiger Den. And, Apple is a great example of that. I'll pull up a little chart here. Just, let's see if I can get my cursor in the right place. I'm going to put up a little chart of that on Tiger TV. And, Apple is just one more stock, and it's really not unusual in the sense. I'm going to put up a weekly because that's going to be more instructive than a daily. So, you see here, you've got, I'm indicating on Tiger TV where Apple's most recent base, it found support at its 50-day line over there. Prior to that, more support at the 50-day line. That's the way good stocks act. They find support at key moving averages when the market itself is going through some kind of downturn or consolidation. Not at all unusual to see that. I believe back when I was at Investors Business Daily, I was over there for 10 years. I taught the market seminars. And one of the pieces of data that some of the research showed was that 90%, that's pretty high, okay? 90% of market leaders had emerged from a correction that occurred simultaneously with a market downturn. So just something to keep in mind. It's a fantastic time to be scouting for the next possible opportunities. I've used the example many, many times. I'm sure I've talked about it on this show, that one of the stocks, now I'm showing you Green Mountain Coffee Roasters, which obviously this is not one that I consider a leading stock at the moment, but back in 2009, 3 years ago, when the market emerged from that terrible bear, we saw March of 2009, indexes began to trend higher. Green Mountain Coffee Roasters was one I had been tracking for months. And that was one that I was able to get into early on because it wasn't any kind of magical insight on my part. I was just watching what the charts were showing. And the charts were showing me that that was a stock that even in that terrible market was technically outperforming other stocks at that time. It did have outstanding fundamentals back then. That was pre-accounting worry days, all of that kind of thing. 3 years ago, it was pretty different for this stock. But nonetheless, the charts were telling me that was positioned better than many of the other stocks in the market, and it did, in fact, provide a great opportunity once the market uptrend reemerged in March of 2009. Okay, I want to look at some stocks that are moving today. Let me put up a chart here of something called PAR Pharmaceuticals, PRX. And I'm going to put a daily chart up here so you can see, making a nice move up today on a down day. Now, what's going on with this one? I did check the news because I noticed that this one was moving up in some pretty big volume this morning. It's involved in a patent infringement suit. So this is the company being sued. This is an interesting chart today because it made some huge moves up in about the first hour of trade today, maybe the first half hour. And now it's pulling back, so already giving up some of those gains. About the only word I can use to describe this right now, and I apologize for being vague, but I just have to be vague. Interesting. Interesting is about all I can say right now. It's way too soon to know, based on one day's action, whether this would be one that I would continue tracking. Let's see. I can tell you here. It's got some estimates for single-digit earnings growth in 2012 and 2013. Market cap a little bit shy of $1.5 billion. Moves about 290,000 shares a day. So, there's a little bit of a mixed bag on this one. It did just emerge from a consolidation right here at the 50-day line. So that's not such a bad thing. So, there is a little bit of a mixed bag on this one, but anytime something jumps up in heavier volume like that, makes a significant price move, it does get my attention. So it just kind of remains to be seen whether this is one that is going to continue showing up on my scans. The scans are really set to be watching ongoing price and volume moves. And it's no guess, it's no opinion, it's no conjecture. It's just what the charts are telling me that are the ones to watch. And I can't believe this first segment just flew by. That was crazy. Okay, I'm Kate Stalter. This is the Small Cap Roundup. Give a call, 877-927-6648, and I'll be back with some more charts right after this break.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Okay, back here. I'm Kate Stalter. This is the Small Cap Roundup. And as always, we like to look at Apple, because doesn't everybody? You know, it's funny. I've said this a lot lately. You know, I do a lot of interviews with fund managers, not only here on TFNN. Today we don't have anybody. My week got a little askew because I had a quick business trip at the start of the week and just kind of was a little out of whack, but that's okay, because today gives us a great opportunity to just go over a whole bunch of charts, something I don't normally get to do if we bring a guest on, so we can have some fun with that today, and we will. But one of the things that always kind of makes me laugh is, you know, I talk to a number of small cap fund managers, and everybody has Apple. Everybody has Apple, you know, and of course now you're going to be getting the dividend fund managers that are coming into that, so it does open up the universe of investing to a whole lot more institutions on that front, of course, and it is still a market leader hanging in there today. You know, again, it's the kind of thing that people are closely monitoring Apple as their gauge of market health, which is not entirely wrong. Now, on the one hand, it's kind of amusing, but it's not wrong. It is the market leader right now, and you know, very heavily weighted in the S&P 500, obviously, and the NASDAQ Composite. So it is not really out of line to be looking at that. Now let's see. My friend G7 in the Tiger Den, is making a good point here. I'm going to read this. One fund manager had to send a note to clients why he doesn't have Apple. That's hilarious. Absolutely. You end up having to make excuses for it. And, I've had advisors tell me that. I've had people say, we can't not be in it. And they're right. It doesn't make sense. It doesn't make sense for them not to be in it. So, okay, anyway, just taking a look at that. Let's have a little fun. I want to do something we always have fun here. That's not what I'm talking about. But I want to do something I normally don't do. As you hear me say often, the methodology that I focus on is buying into strength, looking at fundamentally and technically strong stocks. Now, sometimes I will make an exception on the fundamentals. I do need to say that there will be some momentum plays that I will go into regardless of the fundamentals. That is something. And remember, I'm not talking about some kind of buy and hold thing. We're really talking about trading in some time period, not day trading, usually weeks or months, but often lately it's become days, I have to be honest, in a lot of the market volatility, and that's fine as well. I cut losses quickly, so sometimes it can even be hours. You don't want that to happen, but it's better to cut your losses. Just go with what the chart is telling you. So anyway, I've put up a chart here of something called Spectrum Pharmaceuticals, SPPI, big gap down today. But you know what? I just want to point out, this is the kind of chart I already would not have been looking at, just because it was well off these highs, and it just was not showing any of the requisite technical strength that I like to see. Now, what happened here, I guess the company had some kind of poor clinical results from a bladder cancer drug, and they are also making an acquisition. So, either one of those things can send a stock lower. A lot of times the acquiring company will see shares fall. And, of course, when a pharmaceutical has poor clinical trial results, well, you know what that's going to do. That's not going to help anything. But in any case, just to point out, not looking for anything here that's falling, trying to pick a bottom in any of these. Looks like earnings expected to decline in the next couple of years. You know what? This is just I just kind of put this up to show any new listeners what I would not be looking for. So let me do. I've got about a minute here. Let me show you one more, and I'm gonna, in the second half of the show, I am going to focus on some names showing strength. But I'm just kind of having a little fun today on a downside day in the market, just looking at what some of these names are that are showing some big declines today. Okay, so this is an interesting one. This is Healthcare Services Group, HCSG. Now, this is quite different, actually. Even though it is moving lower on heavy volume today, this is a quite different situation than we would see with SPPI. It is holding up above key moving averages. It's still in a pretty decent trading range. A lot of times you will see stocks falling sharply in heavy volume, but nonetheless still remain in a good range, getting some good support. Could continue to be a watch list candidate. Okay, give me a call, 877-927-6648. I'm Kate Stalter. This is the Small Cap Roundup.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at tfn.com and sign up today.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insight subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of tfnn.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of tfnn.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of tfnn.com.
All right, looks like the indexes are in positive territory. Just by a little bit. Yeah, still in a market correction though. We really need to give the markets, give the indexes a chance to kind of just flush out some of this excess. Actually, the Dow is about flat, maybe just trading a little bit to the downside. But anyway, you know, the Dow is not one of my major indicators that I do tend to use. Some people say it's irrelevant. I wouldn't say it's completely irrelevant. There have been instances where big sell-offs on the Dow actually have precipitated market corrections. It's not unheard of. But nonetheless, the S&P 500 and the NASDAQ are better indicators of, wider market strength or weakness. And of course, the Russell 2000, something that I tend to take a look at. We've talked about that on the show with some of the guests, how that can be a harbinger of some things to come. So, small caps do tend to get beaten up more in a down market, and as we well know, they can also, and frequently usually are, the ones that lead the way out of a bear market. I mean, again, just to go back to that memory of March 2009, I'm sure for a lot of us, it's a very fresh memory still. Just remembering a lot of those little companies that were among the leaders. I mean, I can remember, I talked about this a little bit on Larry's show yesterday, some of those crazy little Chinese small caps. Some of them are delisted now. I'm not even necessarily, I'd have to go back and kind of look at my records of what some of those were. I was in some of them at the time, and they were nice gainers, and some of them are not even around anymore. But, that's okay. Ride the wave. Ride the wave. A lot of them did lead the way out. So that was a very good thing. So let's see here. I have put up a chart of Tyler Technologies. TYL is the ticker on that one. Now, this is I believe they're in Texas, yes, Dallas. They're an IT outsourcer for government agencies. Now, this is really the kind of thing that I'm talking about, is a stock. I've got it on a weekly chart. I'll go over and put it on a daily. It's okay to take a look at this one on a daily. So you can see here the 50-day moving average, and you can see nice support on this one above that 50-day line. Let's see, looks like it's up just a little bit today, although does have some nice gains for the week. It's holding there. Actually, you can't see it on this chart. It's holding above its 10-day line. This is the kind of thing I'm talking about, is that even when you have a market correction, you really have to just kind of dig for these companies that are holding up better technically than the rest of the market. Tyler is a terrific example of that. Now, of course, we are getting into the first quarter earnings season. That's going to slowly get underway here in the next few weeks. And that, of course, always provides a catalyst for some big moves up and down. And interesting, if that is taking shape during a market correction, you could see, again, some even more relevant moves in some of these stocks. So that's an interesting thing. Let me show you another one. I'm just going to go down sort of a list of some of the stocks. The lower price names is what we're looking at. Actually, no, these are the small caps. So Tyler is trading at around, let's see, $39.29. So that's obviously not one that's on my lower price screen. On the low price stocks that I'll be focusing on in the upcoming newsletter, along with the smaller caps, I look at them priced between $5 and $12. No penny stocks, and just nothing that's too low price. It's speculative enough when you're going into that 5 to 12 range, because you have low market caps, thin trade. So that's already an area where you have to be very, very careful, be ready to be very nimble. Take your profits quickly, cut losses very quickly if you have to. You can always get back in. And I know that's not necessarily something that people like to do, and you don't want to get into the day trading realm, and I don't. But it is the case that you want to protect your capital. Risk management is really a very, very key component of what I've been able to do. So, yeah, so Tyler is one. I've got another one that I put up there, U.S. Silica Holdings. Now, this is a specialty chemical maker. It's a pretty recent IPO. And if I go over here to a weekly chart, I can show you there. You see those big blocks there indicating that it really hasn't been public too long, only since early February. Pretty much what you have right here on the chart. So this one kind of did the typical thing. It rallied, then pulled back a little bit, and it still needs a little time to establish its trading pattern. Pretty volatile. Let's see, market cap, just about a billion, just a little over $1 billion. Moves about 670,000 shares a day. Got some terrific fundamental estimates on this one. Good fundamental track record. That's important. Once again, I'm not going to be basing any buy and sell decisions on the fundamentals. However, the earnings and sales look good. Does show you that this is a company with products that are in demand. and that is something that can attract investor attention. So, of course, with the smaller companies, newer, not really well known to Wall Street, you can see a lot more volatile trade. This one, I'm going to go back to a daily chart, and you might be able to get a little bit of a sense of what we're talking about here. Yeah, you can see there are some fairly wide intraday price swings on here. And obviously this one now, it is trending lower. It's below the previous highs. Again, we're in a market correction. This is not showing the requisite kind of strength I'd like to see at the moment. However, watch how it consolidates. Watch how this one plays out. It's one I have been tracking. It has been landing on my screens. I'll just continue to watch this one. Of course, unless the bottom drops out right there, and it does keep tumbling, and in that case, I won't watch it anymore. But for now, it is one to keep taking a look at. Here's one I wrote about in an article for TheStreet.com, Real Money over at TheStreet.com. This is Omnova Solutions, OMN is the ticker on this stock. And now, this is an Ohio company, and so many of these things, these low-price names, companies you've never heard of, they make these products, they're in these businesses that are just absolutely unglamorous. I mean, just couldn't be any less glamorous. They make specialty chemicals for floor coverings and papers and other laminates. I mean, really, talk about a business that is just not going to get any attention from the media. Now, right now, the stock is in a pretty good little area of consolidation after gapping up earlier this month. I think, last month. I think what happened there, if I'm remembering that right, I think they issued some better than expected sales numbers. So here it is on a weekly. You get a longer term picture of what's happening here. And way over on the far right side of that chart, I'm indicating it there on Tiger TV, you can see that nice little area of consolidation. So at the moment, a buy point could be above $7.31. You just have to see. This could be some kind of momentum trade, even in a poor market. I'm not necessarily saying I'm not going to buy anything in a market downturn, but you really have to watch the momentum, and more than ever, especially with these thin, low-price stocks, be prepared to get out in a heartbeat if you have to. This one has a market cap of $311 million, tiny, and it moves about 206,000 shares a day. Volume has picked up in recent weeks after some of those good revenue figures. So, just one I'm keeping an eye on, highly speculative. So you definitely have to keep that in mind, that this is something that's, you don't consider this the same way you would consider Apple. Okay? So let's see. This is Mellanox, MLNX, and it would help if I put the chart up there. MLNX. Yeah, this is one I've followed for quite some time. This is an Israel-based semiconductor designer. They make telecom gear, and also designs for data storage. I was talking about this kind of thing a little bit on Larry's show yesterday, that Apple, if you really think about it, is much more of a consumer discretionary kind of name, a consumer products company, whereas a company like Mellanox, which makes chips and other storage and telecom transmission products, that's something that really is more of a tech. That's a tech company. A lot of venture capital money had gone into Israel and continues to. A lot of high tech companies over there. This is one of them, and terrific earnings estimates. This one for the next 2 fiscal years. And once again, just to remind everybody, the reason I use that is just as a point of reference of the institutional investor's confidence in a stock at any given moment. So right now, let's take a look at the chart. So Mellanox This is one of those, it's actually out of buy range. Even if you were looking at something in any particular given week in a bull market, this one would be out of buy range. Now, let me just see something here. Okay, so you've got a little bit of a pullback here. The weekly closes right now, if it closed today being right where it is now, let's assume, just for the sake of having some fun here, let's assume the stock does not move much more in the rest of today's session. You do have a weekly close less than 1% away from last week's close. If you see 3 or 4 of those in a row, sometimes it even happens over a 5-week period, that can really be a very, very bullish indicator. And once again, even during a market pullback, that's the kind of thing you want to look at. Could provide you with a buy opportunity. So tight weekly closes are another indicator that I like to keep an eye on. And let's see, Mitch from Boston, how come we don't any of these stocks that are way up? Yeah, that's isn't that always the question? That's right. That's right. So, yeah, just taking a look at these. This one could offer an opportunity coming up. So another one I've been tracking for quite some time. This is a volatile one. Now, this is one to be careful. This has pretty high beta, 1.28, and market cap of about 1.65 billion. Moves about 260,000 shares a day. A lot of these overseas companies don't really come to the attention of Wall Street as much. They're not in there raising additional equity or debt financing, so they don't have the analyst coverage. And, that's huge. That's an interesting thing. We hear this over and over again from the fund managers who are identifying some of these names and are the ones pushing them higher through their buying. And they make the good point that, the analyst coverage is very sparse on some of these. Mellanox has not too much institutional ownership, and that's not uncommon for some of these smaller, somewhat thinly traded names, some of these overseas-based names. So that plays a role in how these trade as well. Let me move on. I want to get to another one. Let me show you one here it's another one that I have had in a model portfolio for quite some time. This is Market Access, and MKTX is the ticker on this one. Now, this is one of those electronic brokerages. It provides services to institutional traders. And you see, I'm going to put this back on a weekly chart. You'll get a better picture of the longer-term trend on this one. And you see how it's got nice support there above that 10-week moving average for quite some time. Good moving average support there for the last several weeks in a row. So this is one that has looked pretty good for quite some time and does continue to be a hold. Now, we are seeing a little bit of a pullback here. I'll have to kind of reevaluate this, but I have had this in there for such a long time that there is a good cushion in this particular stock. It is right now, let's see, just a little bit below, actually a little bit above that 10-day line at the moment. So still continuing to show some good action on that one. Okay, let's see here. How about another one? Oh, here's one. Another one that I've liked for quite some time and is one of those that does not get much attention. This is called Altisource. ASPS is the ticker. I think they're based in Luxembourg or somewhere kind of crazy. I'm going to come back. We'll come back. We'll do a little chart analysis of Altisource. We'll talk about that one a bit. Kind of a very interesting stock. I'm Kate Stalter. This is the Small Cap Roundup. Hey, if you want to call in, I've got time for a phone call. 877-927-6648. Be right back.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Final segment, rounding up a few more small caps here today. I'm Kate Stalter. Last segment of the show, last segment of the show for the week. Still have to remember that no trading tomorrow. So, okay, I have a chart up there for Altisource. ASPS is the ticker on this one. And yeah, this is based in Luxembourg. That's what I thought. They do technology. They provide technology for the real estate industry. So, portfolio management, mortgage management, a lot of different services for the real estate industry. So this is a pretty interesting chart. Now, take a look at this. I think you'll see what I mean right away on Tiger TV. Notice the flat trade right in this area, sloping downward a little bit. That's fine. That's fine. Sloping downward a little bit. Very narrow trading range. Does mean that the investors are holding on to shares. Now, this is another small company, 1.4 billion market cap, 155,000 shares a day traded on average. Again, these small overseas companies that just don't get a whole lot of analyst attention. Sparse institutional ownership. Now, here's an interesting thing. I was talking with a friend of mine about this phenomenon yesterday. We're looking at a weekly chart of ASPS. This is actually the fourth consolidation that it's formed on its way up since, let's see, that would be like October 2010. So I'm indicating there on Tiger TV. You can see there was a, here we go, right over here. There was a consolidation back in the later part, actually it's right over here, in the later part of 2010, and I'm pointing it out right now, where it did undercut the low of the prior consolidation. Okay, that's very bullish. You again, to use that phrase I've used several times today, you're flushing out some of the excess, you're setting the stage for some bargain shoppers to come in, and indeed, that did enable Altisource to stage a new rally. So it's actually pulled back into 3 more consolidations since then, never undercutting its low in the market rally, not even in 2011. In the summer of 2011, it managed to stay above the low of the previous consolidation. I'm kind of indicating that on Tiger TV right now. Okay, so normally when you see these repeated pullbacks without undercutting the prior low, that means there's no fresh money. However, with all the quantitative easing, not just in the United States, but central banks in Europe, there has been more money coming in there. So that has actually mitigated this normal effect that we see of repeated pullbacks with higher lows, meaning there's less fresh money. I mean, Apple is a terrific example. It has just over and over and over again pulled into consolidations with higher lows and just continued to rally higher. That's very unusual, but we've got this quantitative easing going on worldwide. That has had an effect. And again, I'm not getting into predictions about what's going to happen. This is just what the charts are showing us, and that really is just a reason why you are seeing a little bit of an abnormality in that case. Let's see. I have time for one more chart here real quickly. I'm just going to go to Buffalo Wild Wings. Then I know I can see my clock is ticking down. We're going to have to get out of here. This had an analyst downgrade recently, but you see it still is really holding very nicely in this pattern. You do hear the media get hysterical about some of the analyst downgrades. Very often, though, the effect of these is short-lived. So this is another one that is continuing to show up on my screens that I will be continuing to take a look at. I like this chart a lot right now. I'm Kate Stalter. That's the Small Cap Roundup for this week. Have a wonderful holiday weekend, everybody, and I will be back here with you again on Tuesday.